Today we are going to tell you about the monetary policy of the Norway. Norway is the country which is also called the land of the Vikings and the land of the midnight sun. The major economic drivers of Norway are the maritime industry and the oil and gas reserves. Coming to the demographic, it is having a population of just 52 lakhs with an unemployment of 4.4%, which is a new low, and it is having a CPI of 2.8%. Coming to some of the facts about Norway, it's the ninth largest exporter of oil worldwide. The petroleum and natural gas accounts for 57% of its economy. It is having a annual hydroelectricity production of more than 150 TWh, which is the sixth highest in the world, and about 98.5% of the Norwegian electricity is generated from hydropower, which is highest ratio of any country worldwide. Although the Norway economy lost its steam in 2016 and there was a fall in petroleum extraction activities as well.
Hello. So let us understand something about the economy of Norway. Norway encourages entrepreneurial activity owing to the economic benefits from openness to global commerce and a good regulatory environment. There is monetary stability as well, and the independent judicial system is also maintained, giving strong protection to property rights. There is accumulation of assets from hydrocarbon sources in the National Wealth Fund, which has provided a cushion for the fiscal stimulus. In an effort to attract FDI and diversify the oil dependent economy, a multi year measure to reduce the top corporate tax rate has lowered the tax rate to 25% with further planned reductions to 24% in 2017 and 23% in 2018. Now let us understand something about the key economic indicators. The GDP of the country is $356 billion with a growth rate of 1.6%. Now obviously it has come down owing to the fall in the oil prices. The unemployment rate is an all-time high at 4.4%. Owing to the same reason, the inflation rate is maintained at a 2.2% rate and the FDI inflow is $4,238 million. Now let us talk about the Norwegian currency, which is krone. Krone was introduced in 1875. In 1939, krone was pegged against the US dollar. 1 US dollar was equivalent to 4.4 kroner. In December 1992, however, the Central Bank of Norway abandoned the fixed exchange rate in favor of a floating exchange rate. Now, the subunit of a krone is 100 ore. Now, in case of coin denominations which are in circulation as of now in 2017, it ranges from 1 krone to 20 kroners.
The operational target of monetary policy at Norway is to have a low and stable inflation with annual CPI pegged at around 2.5% for the 2-year period. In order to attain these objectives, the government has set the Norges Bank. Norges Bank sets the interest rate instruments with the view of achieving the stipulated inflation rate, and it normally tolerates a deviation of around 1%. But the direct effects on consumer prices resulting from changes in interest rate, excise duties, and other circumstances are not taken into consideration. In order to ensure transparency in working of Norges Bank, a supervisory council is set up. Now, this board is appointed by the king in the council and consists of a governor, the deputy governor, and 5 other external members. This board as a whole is responsible for most of the key decisions taken in bank. And also the board works in the consensus with the Norges Bank Act and the Storting's expectation. Storting is nothing but the constitution of Norway. Now let's try to understand how decision making happens. First of all, there is a preparation of the annual monetary policy report by the Norges Bank. This report then reaches to the board 2 weeks before being published. The themes that are of relevance are discussed at length under the meeting agenda during this meeting. Various different angles and interest rate developments are evaluated and assessed during this meeting and are considered for further implementation. The decision to whether adopt a monetary policy strategy or not is made during the same period before the report is being published, and it is also ensured that all the decisions are announced well at the time when report is published. So the entire decision making happens within this 2 weeks period.
The major objectives of the policy are to lower the inflation rate or maintain it at 2.5% over time. Hence, they look for a flexible inflation targeting regime that would stabilize inflation in the medium and long term. The policies are decided every 6 weeks, with written document being explained in the press conference, immaterial of the rates being changed or not. While in many countries, central bank sets the interest rates for maintaining desired liquidity in the market, Norges Bank does the same by altering its key rates. The bank sets the interest rates on commercial and saving banks deposits and overnight loans with Norges Bank, and is also a settlement bank for all interbank transactions. At the end of each day, after all transactions have been settled, any excess liquidity in the banking system is transferred to the bank's sight deposits in Norges Bank. The sight deposit rates are altered based on the inflation outlook 2 years ahead. Banks must borrow from Norges Bank overnight if liquidity in the banking system is insufficient. The difference between the overnight lending rate and the sight deposit rate is usually kept at 2 percentage points on an annual basis.
Norges Bank operates a flexible inflation targeting regime so that weightage is given to both variability in inflation and variability in output and employment. In general, the direct effects on consumer prices resulting from the changes in interest rates, taxes, excise duties, and extraordinary temporary disturbances are not taken into account. It will always be difficult to determine which price movements are permanent and which have short term effects on CPI. The graph shows CPI projections from Monetary Policy Report. It shows inflation over the past years in percent and projection for the period ahead. Inflation is measured as the year-on-year rise in the CPI, and the CPI is adjusted for tax changes and excluding energy products. The continuous lines here illustrate the actual development in inflation, while the broken lines illustrate Norges Bank's projections. The bank left its key policy rate steady at a record low of 0.5% as on December 15, 2016. Policymakers reiterated rates are likely to stay at current levels in the near term. This next slide shows comparison with India. India's monetary policy stance has recently changed from accommodative to neutral, which reaffirm the expectations that we are near the end of rate easing cycle. For Norway, the monetary policy stance is neutral from a long time, and their framework has provided sufficient flexibility to address the shocks that have hit the economy.
Talking about the current scenario, Norway has the world's biggest sovereign fund called the Government Pension Fund of Norway, which is owned by the government itself. This comprises of the Government Pension Fund Global, which is a petroleum fund, and the second is Government Pension Fund Norway, which is an insurance scheme fund. The Government Pension Fund Global is a fund into which the surplus wealth produced by Norwegian petroleum income is deposited. It is not a conventional pension fund. It derives its financial backing from oil profits, not pension contributors. Currently, the revenue from the petroleum sector is at its peak and expected to go down in the future decades. The whole purpose of establishing this fund is to smoothen out the disruptive effects of highly fluctuating oil prices. The Government Pension Fund Norway is managed by Norges Bank Investment Management, which is a part of Norwegian Central Bank on behalf of the Ministry of Finance. The fund's investment strategy includes 60% in equities, 35% in fixed income, and 5% in real estate. But there is a flip side. There has been huge debates regarding the world's largest sovereign funds' use and influence. The three main concerns are whether the country should use the petroleum revenues from the state budget or save it for the future, the reason being it can lead to increase in inflation. The second being whether the high levels of investments in the stock market is financially safe. High diversification and extreme long-term investments will dilute the risk and state is losing a lot of money. The third being whether the investment policy of the petroleum fund is ethical. The question of ethicality comes in when you try to see the bigger picture. The way in this big firm is trying to influence the country's governance, the working, and the corporate influence in the entire of Europe and most of China. This is what Governor Olsen had to say on this. What this means is that the monetary policy of Norway depends a lot on its oil export and production. Hence, the Norges Bank has continued to see a subdued environment for growth in the total economy, and they have downgraded its growth and inflation forecast at the December meeting. The clear risk being that the oil prices reverses its recent bullishness, which is possible as a consequence of increased US production. The Norwegian economy can take a huge hit. So it would be interesting to see what the Governor Olsen decide to steer the economy in the months to come.